we are here again in part 2 of this video. If you haven't seen the previous one, please make sure to go back and check the link below and see what we have spoken about. We have shared a lot of knowledge about property investment cycles and property investment in general, a buyer's agency, how a buyer's agent actually helps you and what they can potentially achieve for you for a very short amount of investment that you put into it. We're here with Mohsin Reza from Investor Partner Group, and he also runs Help Me Buy Property podcast, so you can find him on Spotify, Apple, YouTube, everywhere. And he's also a very affluent property investor out of the country, who has helped a lot of property investors in the country achieve their financial goals, create wealth for their family and friends. So yeah, I have another few set of questions that I'm going to be asking, which are going to provide a lot of value to you guys to understand how a property cycle works, what happens in a property cycle, and when you're looking to invest in property, what you should be looking at, and how things can be made a little bit more convenient for you if you don't want to have another professional helping you, or if you do want to use a professional because they have a lot of range of data that they look at and which you do not have access to. You have to pay thousands and thousands of dollars to actually get access to that data. You could potentially get in touch with these people and they'll be able to help you right through and take you through the whole journey and make you understand that this is what you can achieve within what time frame and how you can achieve that as well. So Mox, thank you so much.
Thank you very much for having me here.
No problem. Again. Thank you. My pleasure. So the next thing I wanted to ask you is, what advice do you have for investors managing their own properties right now? Because there are a lot of people who manage their own properties,
sure,
and it comes with a lot of pros and I think it comes with a lot more cons than it comes with a lot more, pros
Definitely.
itself. So what do you reckon? Why should people not manage properties themselves, and what should they do?
Sure. Look, I mean, when I first started into property investing, I used to be of that mindset that, I can do a lot of property management myself, right? Not to just property management myself, I'll go, mow the lawn myself, fix a tap myself, And so typically what you're doing is, because you're so emotionally attached to the property, you are trying to basically have a bit of a tangible feel to your asset, right? I always say it's like a puppy that you're raising up, right? And that's how you start treating your property. You don't treat property as a business. If you start treating it as a business, you would realize that you need to focus on high value stuff and hand out the low value stuff to the professionals.
Save time.
And that's where the property managers play a massive role in helping you scale up your property portfolio. Okay, one of the biggest setback that I realized very quickly was that when I went from 2 properties to 5, 6, 8 properties, I realized that this is not sustainable. My life basically revolves around properties now.
Too much work,
right? Yeah, and so this is not me creating wealth. This is me creating a headache for myself now, right?
Yeah.
And so it's important that you have the right property manager and the right team in place to help you support you grow your business of property. And I'm choosing my words very carefully. Grow your business of property, because it is a business of property, right? And so you need to hire the right people to help you scale up your business. And so you need to treat your property journey as an entrepreneur, because then you don't need to be in the nitty gritty of, hey, the tap is not working, hey, the lawn is not mowed, hey, the tenant has an issue because they are just being silly, right? And so you don't need to be engaged into all of this, right? You need to focus on high value stuff as to, okay, what else do I need to do? How do I, expand my property portfolio from a first time investor to an experienced investor to a high net worth investor? And, go out, network, understand what other people are doing with various different properties, right? And that's why, these people are really, really important as part of your core team.
I think it's also about what a lot of people don't understand is, when you manage a property yourself, a lot of times you do not inspect properties properly. You do not have the correct inspection reports in the background. And at a time when you have something happen at the property and you go to your insurance and you tell them, hey, the other day this happened at my property, and they're like, hey, can you make sure that you give me an inspection from the last year or 6 months ago? And you're like, my eyes?
Yeah. Yes.
That's when they're like, sorry, we can't help you.
You've created a risk for yourself, right?
Exactly.
Yeah.
So you're paying a very small amount of fee to a property manager because they're actually managing multiple properties in the area.
100%.
They're able to provide that service to you. They're going to provide you regular inspection of the property, which are with photo evidence and everything in the background.
Definitely.
And that helps you for everything.
Definitely.
So tomorrow something happens at the property, you have a basis to go back to. You can go back to the previous inspection report and say, oh, that wasn't there last time.
Definitely.
So that has only happened in this date, in between this date and this date here.
Definitely.
So what are we going to do about this? So those are the type of
100%.
conversations you'd rather have than going into the property, fighting with your tenant, and asking them, hey, how can you do this?
Definitely.
And a lot of times people don't understand there's a residential tenancy act that you have to follow.
Definitely.
There's a lot of rules and regulations you have to follow. You can't just do a lot of things that a lot of private landlords do.
Yes.
They end up doing something which is totally against the law.
Yes.
And they only realize it when they get a VCAT order against them and they're like, oh, I've been fined $2,000 because I entered the property the wrong way the other day. I did not provide them with enough notice. So the property manager is going to take care of that hassle for you.
Definitely.
So I recommend, I totally agree with you on that.
100%.
And it's much needed.
Okay, you need to de-risk yourself, right? To that extent that, even sometimes astute investors go around chasing cheaper property managers, right?
Yeah.
And I am of that opinion now that, you need to find a property manager that provides you quality service.
Yeah.
Even if they charge you a bit extra, that's fine. Because ultimately they are going to look after your property better, find you better trades, save you money at other places, and help you make your life easier, right? A lot of these cheaper property management companies, what they end up doing is, and while I'm saying that, I'm not trying to paint everyone under the same brush, right? There are some companies who are quite price competitive and still provides a great service. But there are some cheaper companies, because their processes are so industrialized that they would have one person who would just give the quote and they never go around reviewing those quotes. And so even without you noticing, you end up paying a lot more in these peripheral expenses.
Exactly.
That you're trying to squeeze in an extra 0.5% or 1% from the property manager without realizing that you've paid an extra $2,000 or $3,000 in these sundry maintenance expenses that you shouldn't have done in the first place.
I agree with you on that, absolutely. And at the time when I was running my property management company, I always made sure, and whenever I was sitting in front of the landlords, I would tell them, hey, I am not going to be negotiating on this fee or anything, because I have got my fee to a point where I believe that this is our value.
100%.
And I am going to save you so much money in maintenance because we have in-house maintenance.
Perfect.
So we had a maintenance personnel who was in-house. Every time I would call somebody from outside, they were probably going to be for a half an hour, $120 to $150, right? My guy who went to the property was $60.
Wow.
Why? Because we had him in-house. He was on a salary. We were not making any money out of that business.
Yes.
All we were doing is to make sure that our people receive what they deserve.
Perfect.
They're not spending anything extra. So there are a lot of property management companies in Victoria who are doing that as well. Plus, they have great relationship with tradespeople outside.
Perfect.
Because you can't have everybody in the business itself. And they have multiple relationships outside, and they have scouted those people, tradespeople. They go to them, they check their pricing, they check the type of jobs they do, they check the reports they provide in return, the invoicing structure they have. So it is very valuable to have a property management partner who's going to be helping you throughout the journey.
Definitely.
And save you a lot more in long term rather than you looking at that 7%, 8% you're paying that property
They are
manager.
your eyes and ears on the ground, right? Especially when you're talking about borderless investing, right? And I'm talking about stateless investing, not so much borderless investing, but stateless investing, where you are going into different states and you're buying properties there. The property manager is the eyes and ears for you.
Absolutely.
They are the one being proactive enough to tell you how the market is moving, how the rental market is moving, and doing all of these things. If your property manager is not proactive enough, they'll just renew your lease with an extra $10 on top, right?
Exactly.
Without telling you, hey, the market has moved by $60 or $80, right?
Yeah.
So it's just little things like these where, people try to squeeze in dollars, because it's the savings mindset, right?
Yeah.
So, yeah.
Fair enough. I totally agree with you on that. Coming to the next thing, can you share some insights into current market trends affecting the investors in investment property cycle right now? What's happening out there which is scaring the people or helping the people in the market right now? So it could be anything. There's only one cycle which goes in play.
Sure.
It could be a scaling cycle, or it could be a cycle which is helping people understand or gain knowledge into it. So what do you recommend is happening out there in the market right now?
Look, I think the silver lining of all of these interest rate rises, is that people are seeing a different cycle of the property market, especially people who've been investing since 2018, 19 or 20, right? They have never seen a downturn. They've never seen a true property cycle, right? All they've seen is lower interest rates, right? When I first started investing, my first property, and I've been very vocal about it, that I bought my first property at 8.9% interest rate, right? Significantly higher. I had freaking fixed my interest rate at 8% at that time, right? And people could not understand what 8% means or looks like, right? And it almost like we are there at 6.5, 6.8. For some people, they might be paying 8% right now, right? And so what that means is that people realize that, low is not the only cycle, the high is the cycle as well, which means that, they can't go around being silly or, over investing into some of these things, right? And so people are really, reconfiguring their thinking around, okay, how to invest into property, which brings me back to, okay, having a strategy in place is very important. The equilibrium of the property, when you talk about interest rates, sits at around 4 to 5% anyway. That's what I strongly believe, right? And so, yes, the market would come back, and yes, the market comes down quite quickly when you talk about interest rate. An interest rate cycle in the history of Australia has never lasted more than 12 months.
No.
Okay? Which means that we know by next year, okay, it has to come down, and every quarter you would see rates going down by 0.25%. But don't think that they are going to go down to 2% again. Okay, that may be another 5 years or 8 years or 10 years, maybe. Who knows, right? But it's not going to. It's going to come back to probably 4.5%, 5% equilibrium.
But that's the normal market, and that's the market that we calculate everything upon.
100%.
When I look at investment properties, or when I look at buying a property, I don't look at the highs or the lows of the market. I look at, can we service this mortgage at a constant 4.5%?
Correct. Yes.
If we can service this mortgage at, for 7 years' time, 4.5%, no matter what the property cycle is doing, no matter what the interest rates are doing,
definitely
4.5%. If we can service it, perfect. We can go for it.
And that's exactly how an astute investor should think. And I think the silver lining of all of these interest rates is basically that the investors are realizing this as a learning, right? So that's number one. Number two is because there are markets within markets, right? While Sydney and Melbourne markets have contracted a lot, including Queensland contracted a lot, there are still markets within Perth that have grown even like last year and this year, okay? I think in 2020 when I did my Facebook Live, I still remember in December 2020, as a parting gift for December, we made a call on Perth market and we said the Perth is going to take off. And people were laughing at us. We're like, what are these people on about? Like, how can Perth go? Perth has never done anything. And it did took off, from March, April 2021 and has done amazingly well for a lot of our clients. We were buying properties there at sub 300, which are now $600,000 properties.
I was going to say that,
So, and we have done this time and time again. We did it in Adelaide in 2018-19 when we were there. There was no one there in Adelaide, right? So again, it's knowing where the markets are moving. My projections, okay, and I'm going to call this out in this today's show. I haven't even called it out in my
free
podcast
advice,
yet.
everyone.
Is that Melbourne and Queensland market are the two markets that are going to come back strongest over the next sort of 24 months.
Queensland is what I'm looking forward to.
Yeah, definitely. Because Queensland has shrunk a lot. So we stopped buying in Queensland almost since 2021 because we thought that, and we believed that the market has hit its peak. Come 2023, the market is back to 2021 levels, which means that it's ripe to now basically continue from here onwards, okay? And when I'm talking about Queensland, I'm talking about core BCC. I'm not talking about Ipswich. I'm not talking about Logan. I'm not talking about Moreton Bay Council. I'm talking about the core Brisbane City Council and those areas. Yes, the yields are low, but I think from a growth opportunity, Queensland is going to outperform and outshine a lot of different states right now. Yes, Perth would still do what Perth is doing right now, and it would continue to do over the next 2 years. But, the real opportunity is Melbourne coming back quite strongly. And of course, Queensland basically outperforming as well at the same time.
And that's the thing with Brisbane as well. I was reading a report yesterday where it said the Queensland market, Brisbane market, BCC market actually went down by 8.5% since 2021 last year. And then it has already picked up to 8%, so which is basically at the point where it was at the peak of the market.
100%.
So it's right there. And the biggest driving factor right now in Brisbane is the availability of the stock. There's no availability of the stock in the market. And when I say that, I have been speaking to people on the ground who are in Brisbane right now. And when I ask them questions, because I love asking property questions, and it's not always recorded or anything. So I, do a lot of research in the background. I call my, BDM in Queensland and I'll be like, hey, what are you doing? What's happening with the market around there? What do you reckon is going to be done? And he's like, mate, there's nothing available here. You want to go buy a property right now? There are 50 groups of people who are coming to buy the property. They'll probably be looking at minimum 7 contracts on the very first open home.
Of course. Look, understand this, right? And a lot of people don't understand this, that the property market has its own muscle memory.
Exactly.
Okay? That muscle memory means that people who have been actively buying in these pockets know where the market was.
Yes.
And they would be ready to pay that price if the time is right. Okay? And it happens literally within a week's
Yeah.
time. For people, because you are Melbourne siders, you've seen this happen to Reservoir, you've seen this happen to Ringwood, you've seen this happen to Vermont, Malvern, Bandura, all
Yep.
of these pockets.
Yep.
You've seen this happen literally in a week's
Yep.
time, where the market was sitting at 600, and a week's time it went to 750,
Absolutely.
like literally overnight,
Yep.
because the market came back quite quickly. And so it's important to understand that muscle memory happens all across Australia.
Yeah.
And so while Brisbane has dipped and started to come back, it would start even more, because what happens is that with muscle memory comes inertia.
Yep.
So people's emotion continue to drive
Yep.
that price, right?
Yep.
So it's like a rolling bus that when it starts, it doesn't stop, it continues to go, basically.
Plus, Brisbane has been a great site. Brisbane has been a great city in terms of giving massive gains. I remember speaking to somebody a couple of years ago when I was in Auckland. That person is from Brisbane, and I asked him, "Hey, what's your investment like in Brisbane?" He's like, "Mate, I bought a couple of properties for a couple of $100,000. He's moved back to Australia now, and I was speaking to him the other day. He's a 55-year-old gentleman, property guy, ex-GM of Ray White National here in Australia. So I asked him, I said, "What's happening with the property market in Brisbane?" He's like, "Mate, I am nearly retired." With those two properties itself, they have given him 500% growth.
Definitely. And look, Adelaide has done exactly the same thing for a lot of people, right? Perth has done a lot of things for their people. What we are talking about today is the opportunity in time right now. I'm not saying that Adelaide is not going to perform or Perth is not going to perform. I always am conscious that, where is the best time, to enter in at that given point in time. For people who have bought in Adelaide, they know that there would be consistent growth coming through. We're not talking about exponential growth anymore. What I'm referring to is exponential growth in these two areas coming back into some of these pockets. The other important thing that a lot of people don't realize is that when you talk about the stock in market, the biggest offset to the stock in market was the brand new builds that would always provide the supply. Okay. What has happened is that together with no stock, or so people not selling their existing homes, there is not enough homes being built into a lot of these pockets, a lot of these areas as well. Okay. And so for that stock to catch up, it's almost 12 to 24 months away, which means that that supply catch up is going to take a lot longer. And so the demand would come in a lot more faster, but there would be no supply and there would be no incoming supply, which means, correct, yes. And so that's what people are not realizing, that, while it's going to, worsen the renters market, because renter would be a lot more impacted because there is not enough places to rent, there is literally not enough buildings available. Right now, the buildings levels are dropped by almost 50% to the levels that they were there 2 years ago, right? So, and that's a massive drop in the building levels. Like, we are below the average building levels as well. Like, this is
way
unheard
below.
of. Yeah.
Plus, we are accepting another 1 million people coming into the country for next 3 years'
100%,
time.
yeah.
So, where do you think, how can we build 1 million houses in the next 3 to 5 years' time?
And these million people who are coming in,
they need housing.
Yeah, and they are not coming in from war-ridden countries.
No.
They are immigrants who are
looking for better opportunities,
100%.
better housing, better facilities out around them.
And so these are people who are coming in from cultures where the first thing that they're taught is go into a country and buy a house.
Exactly.
Yeah.
Exactly.
That's how they're taught, right? We're talking people from Hong Kong, China, India, Malaysia. It's inbuilt in their culture that the first thing when they invest is not crypto. It's either property or gold. Right? So understand that they are cash rich people coming in, competing against you. And they are cash loaded, so their mindset is that regardless of where the price is, it only goes one way, which is up. That's all they've seen, right?
Fair enough.
So
makes sense. I'm going to come to the last part of this chat here now, and this is a major one, which is, and you've touched a very good point on that in literally last part of it. Why should people invest in real estate when there are multiple other options in the market? Example, shares and crypto, especially with small cap markets, right now, obviously looking to flourish in next couple of years' time. So why should people go towards property than any other markets out there?
Sure, yes. And look, it's an amazing question, right? And a lot of business owners ask me this question, right? And I say to people, look, the best ROI that you're going to get in this world is in your business.
Yep.
Okay, if you're going to reinvest
That's
in
right.
your business, because if your business is not giving you the best ROI, you're in the wrong business.
Exactly.
Okay, you should
I
close
agree.
down your business.
I agree.
Right?
Yeah.
So that's number one. Number two is that property is always a safe haven where you can match the risk and reward almost to the T. You know, you can identify your risk and get the same reward.
Yep.
Okay. In markets like share markets, cryptos, you know, ETFs, EFTs,
Yep.
NFTs, all of these, you know, the risk and reward is not as easily matched, right? You cannot predict that risk and reward, you know, matching quite
Yep.
easily.
Yep.
Whereas property is one of those places where the scarcity within the land prices can dictate as to how much risk do you want to take and what sort of rewards are you trying to catch. Okay. The other important thing is from a long-term perspective, and this is the interesting bit, right? That property does not deliver better returns than equities.
No.
Okay,
Yeah.
equity always outperforms, and when I
Yeah.
say equities, I'm talking about shares. Share markets always outperforms properties, you know, almost like by 3 or 4% extra.
100%.
Okay, the only reason property outperforms share market is because of leverage,
Yeah.
access to leverage,
Yep.
right? So because you have so much access to debt, and when you apply those growth rates on a much bigger cost base or much bigger, you know,
Yep.
amount of money, your returns in dollar terms becomes a lot bigger,
Yep.
a lot greater
Yep.
than the property market, than the shares market, right? And the third important thing from a property perspective is that passive income, right? A lot of shares, yes, they can generate dividends. It cannot be at that scale of the passive income
Yeah.
that the property can generate for you, providing for your retirement, right?
Yep.
And you know, you combine all of these factors, it just makes a natural choice for a lot of people to put money into something that is a lot more tangible. They can see, they
Yep.
can watch, they can
Yep.
see it grow, they can pass it down the generation.
Absolutely.
Whereas, you know, shares have that, you know, or shares or equities or some of these, you know, sophisticated investing has a notion of, you know, requires a lot more time invested
Yep.
in proactivity,
Yep.
you know, so for you to manage it quickly. Whereas, you know, property is something that if you've bought it fundamentally right, you can almost set and forget
Yeah.
and pass it to your generation to
Absolutely.
basically take it away from there.
Which is fair enough. I totally agree with you on that because there's a lot of volatility. The market volatility in their shares and crypto is way higher, as we have seen in 2021 crash itself. The market went from, let's say, $100,000 to $10,000 in no time.
Yes.
That doesn't happen in property.
Yes.
Property is it's a haven
Yes.
for investors. The reason being, property doesn't crash. Property goes down in steps.
Yes.
And you understand that when the property is going to go down and when the property is going down, because the interest rates start to peak up, and that's the correlating factor, which is inversely proportional towards the property value. So when they go up, the property value is obviously going to be derived down, and then the supply and demand actually helps that, depending upon how much it's going to go down
The
by.
important thing with property also is that even though the property market might be going down, your net wealth might not drop.
Exactly.
Right?
Yeah.
And one of the things that I teach to a lot of my clients, through our mentoring sessions and, when we are doing the strategy sessions is get access to equity as quick as possible and as often as possible. Refinance your property portfolio at least every 3 months.
Yep.
Get access to that equity. And I call this feeling poor syndrome.
Yeah.
Okay. This feeling poor syndrome is basically, when the market contracts or when the interest rate rise or when inflation happened or when COVID happened, typically what happens is that people start feeling poor. They're not actually poor. They're feeling poor. Oh, the market is going down. Oh, my house is worth a lot less. I can't get a lot of money. But if you have access to that refinance money, you know that the bank has valued your house at X.
Exactly.
You have that money in your bank account, right? So how are you poor?
Exactly.
Your wealth has not gone backwards.
No,
right?
And the bank can't take it back anyways. When you have already got their approved sitting in the bank account on the other
100%.
side, you're not using it, you're not paying anything on that money.
100%.
All you're doing is waiting for the right opportunity to come.
100%. And so it's important that people understand that, from a property perspective, the value of the property is dictated by the next person who's going to buy it.
Yep.
It's not the bank.
Yep.
The bank only dictates the property value when the markets are in the crunch times, typically, right? In other times, it's basically the next person who's going to buy the property is going to dictate the price of the property. And so, as we talked about it before, everyone wants to go for the prices of the property. So there is an inbuilt, inherent thinking behind everyone that, no, I need to pay more.
And everybody needs a house to live. Everybody needs a house to live. Government cannot provide housing to everybody who comes into the country. So there has to be a privatization of the industry, and this is how the privatization of the industry has worked, where people get to make wealth for generations with property by
Definitely.
helping providing, housing supply to the market.
Definitely. Look, Australia is in a unique position where 30% of the employment in Australia is directly or indirectly related to housing market,
Yeah.
right? And so if the government lets the housing market crash, then who is going to pay for all of these people who goes out on the dole, right? So there is a conflicting interest
Yeah.
in the property market as well, that the government does not want it to fail because there is so much GDP
On the line.
tied on the
Yeah.
line with this market.
Absolutely.
So
Thank you so much, Mox. Really appreciate your time today.
thank you.
It has been an immense pleasure talking to you today. The amount of knowledge that you share with, I am pretty sure the amount of knowledge and amount of wealth that people get out of you when they actually work with you alongside and, understand what the property journey is going to do and how you guys can help them is very valuable.
Thank you. And look, thank you for providing the opportunity to share some of this information, and lovely to have you here in the office.
Thank you.
And lovely for you to host me in your show.
Much appreciated. Thank you so much.
Thank you very much.
Thank you, guys. You have a good one.